Hey, good morning, folks. It's Paul, the 920 Trader with 920 Trading and Trading Dakota. Today is Thursday, what is the 11th? Today is July 11th, 2024. We haven't traded anything today. This is our pre-market analysis. Today is CPI day. We had some actually really seemingly good numbers that came up this morning. Core CPI month over month, 0.1%, expected 0.2. CPI month over month, negative 0.1. So, folks, these numbers came in better. Unemployment claims were better than to be expected. So, what happened? You can see it very, very clearly right here, folks. On the 1 minute, it just ran up. For the next few minutes, you got this, you get a little gap. Who cares? Don't care about that gap. But it just ran up. It was a really, really nice run to the upside. The downside is we can't trade anything pre-market, and that's okay, folks. That's okay. Now, here's what I'm going to be looking for today, folks. If we continue on the path back to the upside, I don't know yet. I just don't know yet. May have, obviously, we're going to find some pivot points up high, maybe a futures line or two. But as far as what we're looking for up top, don't know. Wait till market opens and then, pull up some pivot points. I use John Carter pivot points. If I run out of space like we did yesterday, or run out of pivot points like we did yesterday, we're going to look at standard pivot points. And we found some really, really nice targets to the upside using both John Carter and standard pivot points yesterday. Those were, they were really good. They played out very, very well. Now, if for some reason we start selling off today, for whatever reason, think about it this way, folks. When the economic data comes in better than expected, there's no reason for the Fed to lower interest rates. Think about that. If they lower interest rates, the reasoning is if they lower interest rates, there's something broken in the economy. And the fact that in their eyes, in their view, based on the numbers, based on the measurables, if the numbers continue to the good side, there's no need to lower interest rates. And if there's no need to lower interest rates, maybe the market comes down. I don't know. Maybe there's a sell-off. Who knows? I have no earthly idea. Everything at this point, obviously, is speculation. You can see the timestamp down here right now. It is 8:42 Eastern time. We're on the Eastern time, market time. I'm in Central time at 7:42 for me. So we've got 47 and a half minutes before the market opens. We should, or it's possible that we see some more movement out of pre-market. Let's talk about pre-market high, 563.53. So that's pre-market high, pre-market low, 560.54. So we're dealing with right about $3. We got $3 between pre-market high and pre-market low, folks. That is absolutely perfect. Now we have to obviously work out of one of these ranges. But we don't. If we can channel between that $3 range all day, that'd be kind of cool. I doubt that it's going to happen like that. But just play what's in front of you. Now, if we start making moves back to the downside through that pre-market low, I've got a bunch of levels down here. Let me pull up that higher time frame. I'll pull up this. This is a 15-minute look. So we got pre-market low. Then we have a 30-minute zone here. We've got a 30-minute zone here. We've got these 15-minute stair step followed by a 5-minute stair step, another 15-minute stair step, and then the bottom down here at 557. Now, there are obviously other levels down below that, and we'll worry about those when we get there, folks. But this is how I get my levels. I'm looking at these strong 30-minute zones. So we call these zones down low. We're going to call these demand zones. Now, if you can take your plays out of strong demand zones to the downside or supply zones to the upside, you're going to take, number one, you're going to take fewer trades. Number two, they're going to be higher quality trades. And number three, you're just going to do better. You're going to be less stressed. Again, if you take your plays directly out of those demand zones, down low, 30-minute, 15-minute, 30 minutes preferred, followed by 15, and then 5. If it's a stair step after the play's already started, take your plays out of those stair steps. As a matter of fact, I had a comment on my YouTube video yesterday. A guy said, "Hey, when we have a slow plotting move like we had yesterday," and you can see that right here. Here's yesterday's price action on the 30-minute. Where do you take your entries? And I said, well, you look for a stair step. And so a stair step, all that is, folks, is a higher time frame level of support. So what you're doing is you're looking for a stair step. 5-minute, 15-minute. We actually had a 3-minute stair step that we worked out of yesterday. So you're looking for a cross to the upside if we're moving up, and then with support directly on that stair step. By doing that, what you're doing is you're better able to predefine your risk before you enter the play, which is critical, folks. You have to be able to predefine your risk before you ever put on a play. If you don't, you're just guessing. You have to know exactly where you're going to stop out before you ever put on the play. Now, here's a 5-minute look. Again, this is a 5-minute look, and this is price action from yesterday. All this, so you can see this beautiful move back to the upside on the 5-minute yesterday. Here's that 5-minute stair step right in here that we're talking about, and I put that in there because we don't want to have too much room between zones. We have to know where that higher level. I mean, it's a lower level than a 30-minute, but still looking for a higher level area of support or resistance. So again, here's that 5-minute look. And then moving into, after hours and then pre-market again, CPI data that came out today. Here's your 1-minute look again. But these are the things that I'll be looking at, folks. So what you want to do, in my opinion, is number one, stack the probabilities in your favor. When your edge presents itself, put on the trade. And again, the higher the time frame, the stronger the level. So if you can use 30-minute zones, demand zones down low, supply zones up top, for your entries, you will be a much, much more successful trader, folks. Use those higher time frames, trust those higher time frames. But that's what I'm looking at today, folks. Again, today is Wednesday. It is July 11th, 2024. CPI data came out this morning. Now let's see if we have anything else that's coming out today. So we had CPI, we had unemployment claims. Let me see. The only thing that could possibly potentially move the market is we have a 30-year bond auction at 1:01 Eastern time. We have seen the 30-year bond auction just do really, really cool things in the market. So be aware of that. Again, 1:01 this afternoon, 30-year bond auction. Now, a couple of months ago, we had that 30-year bond auction. It was crazy. We had a higher yield in the bond auction, which we would expect because money is pouring into bonds because it's safer money. We would expect the equities to go down, but it didn't. It ran up like $4, $5, $6, something like that. But anyway, that's what I'm looking for today, folks. So if you are interested in live daily trading, folks, and again, this is where the rubber meets the road, is actually trading. If you're interested in that, head on over to Trading Dakota. The link for that is down below. We talk about these trades all day long, folks. That's all we do. It's all trading all the time, all day long from market open. Actually, we get online at about 9 o'clock Eastern. So here in about 13, 14 minutes, we will be getting online and talking about our expectation, what we're looking for, and that sort of thing. So again, folks, Trading Decoded, the link for that is down below. Now, if you're interested in the 920 crossover strategy, head on over to 920trading.com. All of the information is there for you to see. So again, go check it out. We'd love to have you as a member. Again, Trading Decoded. We're going to give you that first week for free. So again, these are things that I'm looking at for the trading day. So be well, trade well. If your edge presents itself, put on the trade, folks. That's about as simple as it is. So everybody, I hope you have a great day. We're going to see you after the market, but until then, we will see you in the markets.